Goods and services tax collections got a leg up in June with a mop-up of 90,917 crore rupees. Let's do a three-point analysis to understand what led to this surge in the collections in June and also will the trend continue. 1. Sharp surge in the June GST collections. GST collections had nosedived to a record low of 32,294 crores in April, which was down 72% year-on-year. It recovered to 62,000 crores in May and further increased to 90,917 crores in June, which is down 9% year-on-year. Now, the June figure is also 46% higher than May and 181% higher than April collections. The surge in collections signals green shoots appearing in the economy after partial lifting of the lockdown. However, it is important to note that many companies paid their GST dues for March, April and May in the month of June due to the moratorium extended by the government. So the surge is also due to the consolidated taxes for these previous months. Pertinently, states like Punjab, Chhattisgarh, Madhya Pradesh, Bihar, Assam, also Andhra Pradesh and Telangana as well as Karnataka witnessed a growth in the collection in the June month over the last year. 2. GST collections haven't boosted government's revenues as expected. Well, since the introduction back in July 2017, the GST collections haven't boosted government revenues to the extent that was predicted by many. Experts point at its structural infirmities and also absence of a robust anti-evasion mechanism. Also, the aggregate GST rate was lower than the revenue neutral rate or RNR determined by the experts right from the start. A series of rate cuts announced over 2 years since its launch has widened the gap between revenue neutral rate as well as the aggregate rate. A steady improvement in the compliance seen over 2019-20, particularly in the second half of that year, had a positive impact on the collections, but compliance again slipped ahead of the COVID-19 pandemic and fell steeply due to the lockdown as well. Now, the average monthly GST collections in FY20 was about 1.02 lakh crore rupees, up 3.8% on a year-on-year basis. Experts have pointed out that the GST revenue growth is not only below the optimistic projections made before its launch, but also trails the immediate past trend growth rates of various taxes subsumed in GST. Moreover, the state GST shortfall on a monthly average basis was 12,583 crores in FY20. 3. What's the outlook on GST collections going forward then? Well, the government has said that taxpayers still have time to file returns for May, which indicates that the July figures may also see a jump. Finance Secretary has told media that rate rationalization, removal of inverted duty structure to reduce friction among trade and also a lesser number of slabs will all be discussed in the months to come, as the whole idea is to make the GST process simpler for taxpayers. GST faces its toughest test as it enters its 4th year. And the upcoming challenge to GST, however, does not stem from its design or structure or the way it has been run, but it is up against the COVID-19 pandemic that has wreaked havoc in the economy. Experts say that perhaps the toughest challenge for the GST Council going ahead will be on how to devise ways to compensate the states going forward from here.